Hey everyone, I thought I'd make this video because last week we had the CREB Forecast Breakfast, and that's always an exciting time of the year because we bring out a chief economist to take a look at what took place in 2022 and what the forecast looks like for 2023. So I thought I'd create this video. I think you'll find it really interesting. We got some cool stats in here and some good predictions. And so you'll notice by this first chart, you can see where we've come from all the way from 2014. The red line is price growth. So you can see how, we dropped in 2015, and you can see that trend of that dark time of Calgary and most of Alberta until all the way we hit 2021. And you can see how 2021 and 2022 were very strong years as far as price growth in Calgary. And we'll look at those numbers in just a minute. We all know interest rates started rising. We all know the government of Canada wants to slow down inflation. And everybody is wondering really how that's going to affect us, especially right here in Calgary and Alberta. And you'll see by some of the things we're going to go over that, it's kind of a good news, bad news thing. But here's the good news is that you can see their predictions of price growth are going to be stable. They're not predicting a recession for Alberta, and they're not really predicting that prices are going to fall. They believe, the experts anyway, they believe that the prices are going to be relatively stable. Now, you'll see that these are the considerations for 2023 that they're taking a good look at as to what could affect our market. Lending rates are obvious. The net migration of people moving here, I know I've been talking about it for a while. Employment, which does look pretty good, and what is going to be our supply on the market. There's no question that these four things will have a major impact on what happens with the real estate market in Alberta and in particular Calgary. So the comment that was made, well, economic growth is expected to slow. Forecasters are not calling for a recession in the province. And the buyer and seller considerations, and you can see by this chart, here is what they're predicting as the upside risk to the forecast. Interprovincial migrants seeking home ownership. It may be less sensitive to rates should they be coming from a higher priced market supporting stronger than expected demand. In other words, if you're coming here from BC or Ontario, these migrants probably are not going to be as sensitive to what the prices are and the interest rates. Supply levels remaining low across property types that can result in stronger than expected price gains. What's the downside risk to the forecast? Well, uncertainty, surrounded by environmental and energy sector policy and investment impacting future growth prospects. So we know we're still a very sensitive to oil and gas in our province, so that's always a risk. And should inflation pressure not ease enough, requiring further rate gains, we could see higher than expected pullback in sales. So there is some risk if the government of Canada continues to raise rates. There's no question that could impact the pricing. But I personally don't think we're going to see much of that now. I think the worst is over when it comes to that. Coast to coast comparison, well, how is Alberta different? I don't think this is earth-shattering news, but it's kind of cool to look at the charts. And you can see with pricing, look at Greater Toronto. Their benchmark price was $536 in 2014. 2022 was $1,195,950. Well, no wonder people want to leave the GTA. That really makes the cost of living pretty tough when the biggest chunk of your paycheck every month is just going to make a mortgage payment. You're house poor. So rather than be house poor in the GTA, why not come to Edmonton or Calgary where you can actually, go skiing and go out for dinner on Friday night? That seems a lot more attractive to live than I think this is. And same with Vancouver. Look at that. 2014, it was $691. Same thing, $1,199,000. So both these markets are just unaffordable. Here we are in Calgary. We finished off at 516 as our benchmark price. That does include condos. I mean, that's more than 50% of the price of the GTA. That's incredible. And look at even Edmonton, 389. I mean, that's a really affordable place to be. So, no wonder that there's a lot of attention on Alberta. We have jobs and it's just affordable. So it is expected that the Bank of Canada will not lower interest rates until 2024. So it looks like we're going to be stuck at these rates at least for another year. And I think we're all hopeful that 2024 they start coming down. And there's just an idea of where we've been when it comes to inflation and the Bank of Canada rate. This should not be any earth-shattering news. You can see how everything just started jumping in 2021, and that's just why the government had to take some action. Population. Well, you can see this is why net migration is something that we're really looking at, and they're tracking the numbers. And I mean, if you really take a look at this, for the province of Alberta, they're expecting an international net migration of 70,294. They've even got these predictions of where some of these stats are coming from. I mean, they're predicting 18,000 people are going to come from Ontario, 6,800 people from BC, 4,000 from Manitoba, 1,200 from Quebec, not much from Atlantic Canada, and 3,000 from Saskatchewan, a little bit from the territories. And of course, we have quite a few people that are coming here from definitely China and India to this day. So Alberta, when you look at all the provinces in Canada, if you want to look at quality of life, we definitely are right up there as the top of all the provinces because of cost of living and the fact that we have jobs. So that part looks very, very good. And employment, you can see that for Calgary anyway, the employment growth rate they're expecting is to be at 1%. The 2022 employment growth was here. Calgary was at 7.67, Edmonton at 3.53. Those were some pretty healthy numbers. Our unemployment rate for Calgary right now is at about 5.8%. Alberta's about 5.10, and Canada nationally is at 3.72%. So the employment numbers do look good. This highlighted right here said job growth is expected to slow in 2023 down to 1%, as I said. Housing starts. You can see here in 2022, of course, we had some pretty strong housing starts. When you look at up here, I mean, that was right up there with 2014 and right up there with 2006. So we were, if you look at all the way back to 2005, last year was a really strong market. And it's not going to be as good as it was last year. But if you take a look at all the other years, they're expecting it to be somewhere between 2020 and 2022. So it's going to be what I would consider to be a normal year going all the way back to 2005. Let's look at the resale market. This gives you a cap on this, and I've talked about this in other videos. We finished the year at 29,672 sales on the MLS, which, by the way, was a record for Calgary. That was an unbelievable year. So we're definitely not going to see that again next year, but you'll see as we wrap up this video what they're expecting for 2023, and it's really not that bad. But that was a 7% increase year over year in volume sales. 38,893 listings. So you can see that a lot of the inventory got bought up. Finished the year down lower on inventory, and that is one of the issues we do have right now, is very, very low inventory. And I have my own theory on this, but part of it is when you have low inventory that people are a little afraid to move because they're fearful they can't find what they're looking for. Some people are in their current mortgage rates and they're fearful of having to go to a higher rate, although you could look at porting your mortgage to your next property. But I will say this, traditionally when inventory is low, there does come a point where people do start putting their properties on the market, and that does tend to settle things down. Like low inventory traditionally means higher pricing, and normally you would see that, but these interest rates seem to be keeping it stable. But I do think that you will see some more inventory coming on the market in the spring, but we are low right now, 1.68 months of supply. And you can see we finished the benchmark price up 12% year over year. So just a really strong year in 2022. Detached homes in Calgary, you can see if we want to break this down, we did a little bit less as far as detached home sales, which was a little surprising when you consider how good of a year that was. 17,037 in 2021, 15,795 in 2022. We finished the benchmark price up 14% year over year. So your benchmark price of a detached house in Calgary finished off at $629,350. Pretty strong year. But we also finished off 13% lower in inventory. Semi-detached, the comment here is as we move into 2023, sales activity is expected to ease relative to the high levels achieved over the past 2 years, but remains stronger than activity reported before the pandemic as purchasers continue to seek out more affordable options in the market. And no question about that, we're going to see more of it with the higher interest rates of the lower priced real estate being very attractive. You can see here, sales 2503, almost the same as 2021. The benchmark price was up 11.97%, so it was healthy to see demand in semi-detached. Row housing. Higher lending rates will continue to draw purchasers to this segment of the market, but supply levels will likely remain relatively low in 2023 compared to sales, preventing any significant adjustment in prices. While we do not anticipate prices to ease in this sector, the pace of growth is expected to slow to under 1%. I'm not so sure about that. I just listed a property last week and got multiple offers on a $299,000 townhouse. There's a pretty good demand there. I mean, take a look at the sales. 51.53 over 39.35. That's a almost 31% increase in sales year over year. That demand is very healthy. Look at the price increases, 14.81%. I mean, there's definitely a lot of people wanting these. So there's room for price increasing, in my opinion. I'm not so sure I agree with the experts on this one, and the stats don't lie. Apartment condos. Rising prices combined with higher lending rates are expected to cool sales activity in 2023. However, the relatively affordability of apartment condos and rising rental rates are expected to keep ownership sales for apartment condos above the long-term trends. Now, this was also the bright spot. I mean, look at a 50% increase in sales year over year, 6,221 condos sold compared to 4142. Our benchmark price, I mean, we finally hit almost 272,000, which is really where we were in 2015. We're finally back to where we were, after almost 8 years of pain. So this is a bright spot, and I really think that's going to continue. I still don't know if I really agree with the experts on that comment, but that's okay. They're experts. We'll let them say what they say. Airdrie. Prices did start to trend down from a record high in April, but still finished 20% higher. What's going on in Airdrie? I mean, 2,469 sales, so they were up 7%. Look at the price increases, 20.34%. All of a sudden, people want Airdrie. I mean, it's a nice community. I just don't know what it was that all of a sudden, just took off the way that it did. I mean, Airdrie has a lot to offer. But I don't know that it's as cheap in Airdrie as it used to be. At one point, you went to Airdrie because you got more bang for your buck. I don't know that you can anymore. Cochrane, another hot market all last year. But unlike most area, new listings are on the rise, giving some needed relief. You can see about 8% year down in sales from 2021. I mean, it was red hot that year. Pricing, though, I mean, look what happened. They went up 16.64%. Not as strong as Airdrie, but $504,000, for a benchmark price. That's almost the same prices of Calgary. So it's no longer less expensive to go to Cochrane, but it is a beautiful community, and I'm a big fan of Cochrane. Okotoks. There's been lots of improvement in new home starts activity, which should help with the supply, but much of the gains have been for multifamily properties. Interesting for Okotoks, because again, I think most people think of going out to Okotoks to get a single family dwelling. They had 843 sales, so that's up a little bit from 2021, and their benchmark price, it jumped 15.65% from 469, to 542. Nice community though. I love Okotoks. I don't fault anybody for wanting to be there. Chestermere. Strong growth in sales in the first half of the year was not enough to offset the easing that occurred in the end of 2022, and annual sales declined by 13%. So while typical detached homes are larger in the Chestermere area when compared to Calgary, prices are also higher as the annual detached benchmark price hit just under $700,000 by the end of the year. Higher lending rates combined with more supply options will likely cause some adjustments in prices over the next year. Another really, really popular area is Chestermere. That lake community, people love it, very family oriented. They were down in sales, and I do know because they had a bit of an inventory problem. It was tough. I had some clients last year that wanted to buy in Chestermere, and it was tough to find some properties that fit the bill. But same problem here with price increases. I guess problem for the buyers, not a problem for the seller. But 540 is where it was when they started the year, finished off at 626, 833 is the benchmark price, and that includes condos. It mentioned up here 700,000. That was just detached houses. Strathmore. Higher rates will no doubt have an effect, but if inventory remains low, the prices will remain stable. It was a pretty relatively similar year in 2022 with 403 sales. The benchmark price did rise 10.54% from 336 to 382. Very affordable in Strathmore, so you're still going to see a certain percentage of the population that's willing to live out there and make the commute into Calgary. Canmore, there's an island in itself. That just was an absolute incredible market in Canmore. There was so many people that wanted to own in Canmore, and really COVID's it just changed everything, where so many people just wanted to be able to drive there and have a second property. So it really, really took off for the last couple of years in Canmore, and it was absolutely insane last spring with low levels of inventory and such a high demand. Sales were actually down from 2021, and primarily it was just an inventory problem. It wasn't that there wasn't a demand, but even still, look at the price increases of 17.4%, going from 714 to 839. That includes condo. So you can see Canmore is not a cheap place to live. Here's our summary. I'll just go through this and go through the highlights without every little detail. But total residential sales, they are predicting 25,921. And let me tell you, that's actually a very, very healthy market when you consider that in the 16, 17, 18, 19, we were hovering around 16 to 18,000 sales per year. So that's going to be a healthy year, and that might surprise some people, but that is some pretty good demand. And I tend to think that that's accurate when you factor in, the job growth and the amount of people moving here and the affordability of Alberta. They are predicting our GDP to grow 1.9%, so obviously nowhere near what it was in 2022. Calgary, though, they're expecting 3.2% compared to 4.81. And as mentioned, the unemployment rate, they believe, is going to drop to 5.8. So that's good. Population for Calgary, they're expecting we're going to get about 25,000 people of the total 70,000 that they think is going to move here. So that's pretty healthy. New homes starts for single family, they're expecting 4,167 compared to 5,744. And housing starts for multiple family, 8,373 compared to last year at 11,359. Lending rates, well, I guess their prediction is that it's going to average out probably more the 5-year rate, about 4.25. I know you can right now still get some 4.5 to 4.7% money on a 5-year fixed. They're expecting oil to be about $77 a barrel. Last year, I guess it averaged about 94.91. So it's a long video, but I hope it's been informative. Wrapping it all up, everything looks good for Alberta, which means, bottom line, if you're thinking of buying a property, this is not a bad time to be buying. I firmly believe that you won't regret it, even in terms of pricing. I know a lot of buyers try to time the market and buy at the right time. They don't want prices to go down. This is a good time. Take advantage of it. I believe, especially if interest rates start coming down in 2024, we could actually see some pretty substantial price increases even the following year. So I think this year is going to create some opportunity. Definitely, if you're selling, you can look at bringing your mortgage with you. And I think that's a good alternative so that you can keep the low interest rate that you might already have locked in, and you can still move up to the property that you want to be into. So, as always, if you have in questions or you want to get a deeper understanding of the market in your particular community and the value of your home, or if you're looking at buying and you really want to take a look at which areas around the city and communities might be better for you, and you want to talk about those markets, because keep in mind, we are looking at the overall market around Calgary and surrounding areas. Real estate does change from community to community, so you do have to look at every community individually. I have a lot of experience in that, and I will be happy to help. So feel free to reach out to me, whatever method you prefer, and I'll be there to answer your questions. All the best to you.